After 8 years of trading prop firms, close to 1,000 individual payouts and $2.5 million taken from the markets, I can tell you the truth almost nobody in this space will say out loud. Passing a challenge is the easy part. Getting paid consistently month after month for years, that is the part almost everyone fails at. I have watched so many traders pass challenges, get funded, and then never see a single dollar. They blow the account before the first payout, or they get one payout and give it all back. The challenge was never the hard part. The payout is where the real game actually begins. This video is the complete system I use to take consistent payouts. Not how to pass, how to actually get paid over and over and build a real income from it. 6 layers into this presentation. Why most funded traders never get paid. The numbers and mindset behind every trade. How the actual withdrawal works, the single insight that changed everything, stacking payout days across accounts. How to build the income machine and what keeps the whole thing running for years. This is the actual operating system behind $2.5 million in payouts. If you have ever passed a challenge and then lost the account, this is the video that fixes that forever. Let me show you how getting paid actually works. Layer 1. Why most funded traders never get paid. You need to understand why most traders fail at this stage, because if you do not understand the problem, then you will repeat it. The prop firm model is pretty simple. Most traders pay for challenges and never get paid. The fees from thousands of failing traders fund the payouts of the few who succeed. The structure assumes that most funded traders will lose the account before they extract real money. Here's what happens. A trader passes the challenge. They are excited, and in that excitement they do the one thing that kills them. They change how they trade. They size up because it is the firm's money now. They will take setups they will never take on a challenge. They treat the fund account like a free lottery ticket instead of the most valuable thing they own. Within 2 weeks the account is gone. No payout and back to buying challenges. The traders who get paid do the opposite. They treat the fund account as more precious than the challenge one. They trade smaller and not bigger. They protect it like it is the only one they will ever get. And because of that, they survive long enough to actually withdraw money from it. The whole game flips the moment you get funded. On the challenge, the goal is to pass. On the fund account, the goal is to never lose it. Most traders never make that switch. And that is why most funded traders never get paid. Layer 2, the numbers and the mindset behind every trade. 2 things drive every trade on a fund account. The risk I use and the mindset I trade with. First, the risk, and it is different for different firms. On CFD prop firms, the synthetic forex style firms, I use 1% max risk per trade. CFD firms give more drawdown room and easier payouts, so I do not need to push it. On futures prop firms, I take the drawdown and divide it by 8. If the drawdown is $2,000, my risk is $250. 8 losses in a row before I am in trouble, and I have never lost 8 in a row in 8 years. The principle across both is the same. On a fund account, you risk less than you think you should. The temptation is always to size up because the money is real. That temptation is exactly what blows fund accounts. Now the mindset. Most traders sit down thinking about the trade. I sit down thinking about the payout. Everything is reverse engineered from one question. What is the lowest risk path to my next withdrawal? When you are payout focused instead of trade focused, you stop chasing the big day. You take fewer trades, only the cleanest setups, and let the account build slowly toward that threshold. A payout is not a moment of glory. It is a boring routine you run over and over. And boring is exactly what gets you paid for years. Risk small. Think payouts, not trades. That is the foundation of everything. Layer 3. How the actual withdrawal process works. Now, the mechanics of actually getting the money out. 2 parts. Handling the consistency rule and timing your first payout. The consistency rule says no single day can be too large a share of your total profit, usually around 40%. Most traders fail it by having one massive green day, making most of their profit in a single session, and then they cannot withdraw because that one day breaks the rule. Here's how I handle it. I spread my profit evenly across days. I target the daily limit and never exceed it. Even on a day where the market is handing me money, I stop when I hit my daily allocation. I leave money on the table on purpose, because a payout spread evenly passes the consistency rule automatically. A payout concentrated in one day gets stuck in it. Now the first payout. I take it as soon as I am eligible. The moment I hit the minimum days and minimum profit, I withdraw. No waiting and no buffer. Why? Because the firm payout proves the firm actually pays. The fastest way to know a firm is legit is to get money out of it. It gives my brain proof. Seeing real money from a funded trade drops the pressure and it locks in the cycle. The first one is the hardest because it is unproven. After that, every payout is just a repeat. Spread profit evenly. Take the first payout fast. then run the cycle again and again. Layer 4. Stacking payout days across accounts. This is the most important layer in the entire video. The insight that changed everything for me and almost nobody teaches it. When you have one fund account, your income is lumpy. You trade, you build profit, you hit the threshold, you withdraw. Then you start over. Some weeks you get paid, some weeks you do not. The income is unpredictable. When you have 10 to 20 fund accounts, you can do something powerful. You stack the payout days so money is always coming in. Each account has its own payout cycle. Instead of all of them lining up on the same day, you stagger them. Account 1 pays this week, account 2 next week, account 3 by the week after. By spreading the cycles across the portfolio, you turn that lumpy, unpredictable income into a steady income. I have payouts landing constantly because I have 10 to 20 funded accounts on slightly different cycles. One is always hitting the withdrawal window. The money never stops. It is not feast and famine anymore. It is a consistent flow. This is the difference between trading platforms as a hobby and running them as a business. A single account is a slot machine. A portfolio of staggered accounts is an income machine. The trades are the same. The risk is the same, but the income profile is completely different. This is why I run 10 to 20 accounts. Not to risk more, because staggered payout cycles create the one thing that every trader actually wants. Predictable income that arrives no matter what any single account is doing. Stagger the cycles. Turn lumpy income into a steady stream. That is the real secret to making prop firms a business instead of a gamble. Layer 5. Building the income machine. So how do you get from one account to a portfolio of 20? Through aggressive reinvestment early on. Most people want to pull all their profits out and spend them. I did the opposite. In the early years, almost every dollar I made from payouts went straight back into buying more challenges and building more funded accounts. The logic behind it? Well, one funded account makes you a certain amount per month. 10 of them make you 10 times that. 20 make you 20 times that. The fastest way to real income is not to extract from one account. It is to use your early payouts to build a portfolio that all pays you at once. So in the beginning, the payouts were not income, they were fuel. Every payout bought more challenges. Every past challenge became another funded account. The whole thing just compounds. This takes discipline. It is tempting to take your first few payouts and treat yourself, but the traders who build real wealth resist that early on and reinvest instead. You are planting seeds. The harvest comes later and is much bigger than anything you could have extracted early. And here is what you end up with. 10 to 20 accounts, each traded with small risk, each focused on the payout, all on staggered cycles. The result is income that does not depend on any single account. If one has a bad week, 19 others are still working. The portfolio smooths out all the variance that destroys those single account traders. And that is the machine. Reinvest aggressively early and you build something that produces predictable income as reliably as a job, except you own all of it. And layer 6, what keeps the whole thing running. The machine only works if two things stay true. You choose firms that actually pay and you protect the accounts that pay you. First, choosing firms. The cheapest challenge is not the most important thing. The firm that pays fastest and most reliably is. I would rather pay a little more for a firm that pays in under an hour with 0 deniers than save $20 on a firm that takes weeks and looks for reasons to deny you. I look for fast payouts, a public track record of actually paying, near zero denial, clean defined trading rules, and a platform that does not fight against you. A great trader on a bad firm just gets denied. An average trader on a great firm gets paid. Second, protecting the account. Everything depends on the account surviving long enough to pay you. Blow a challenge, you spend a couple $100 on a new one. Blow a fund account, you lose the entire income stream that it represents. So I have hard protective rules. After 2 losses in a session, I stop. The day is over. No revenge trading. I never risk enough to threaten the account on any single trade. The account is the goose that lays the eggs, and you do not gamble with the goose. And I never break a rule. Not the daily loss limit, not the consistency rule. Breaking them gives the firm a reason to deny your payout, and a denied payout means you did the work for nothing. The math is pretty simple. A protected account on a firm that pays will pay you for months or years. Choose right, protect hard, and the machine keeps on running. So let's bring all 6 layers together again. Why most traders never get paid? They change how they trade the moment they get funded. So do the opposite. The numbers and mindset. 1% on CFD, drawdown divided by 8 on futures. Think payouts and not trades. How the withdrawal process works. Spread profit evenly to pass the consistency rule. Take the first payout the moment you are eligible. Stacking payout days. The big one. Stagger cycles across 10 to 20 accounts so money is always coming in. Building the machine. Reinvest aggressively early. Build a portfolio first. The income comes later and it is pretty big. What keeps it running? Choose firms that pay fast with zero deniers. Protect every account to the best of your abilities. I have used this exact system to take close to 1,000 payout. $2.5 million from the markets. 8 years of getting paid over and over again because I built a machine instead of chasing one big jackpot. Passing the challenge gets you in the door, but this system is what actually pays you. The question is whether you will build the machine or keep pulling the slot machine lever. If you want me to walk you through building this personally, I run a mentorship program called the Prop Firm Blueprint. I do not work with everyone, but if you are serious about turning prop firms into real income, you can apply through the link in the description. And when you are ready for a firm that actually pays fast, I recommend Hola Prime. There's a link for that in the description as well. Thank you guys for watching and I'll see you in the next one.